Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, September 2nd, 2024. Hope you guys are having a fantastic Labor Day weekend, and let's get started. So, Friday, pretty bizarre day, and I'll go over all that, but I just want to show you guys a bigger picture here. And if you remember, the expectations has always been that this was the wave four and we're making a wave five up. That should take us to new all-time highs, but that will probably be the final leg of this before we have a much deeper pullback. And it's that's really what we're looking at with it. So if we zoom in a little bit and go to a 60-minute chart to see where we are as far as with this final wave, you can see we have one, two, three. We could do three anywhere. It doesn't really make a difference, but it's here, four, and now we're making the wave five. We have the all-time highs that are only 20 points ahead. So there's a shot that they're going to try to gap it up tomorrow over it. We'll have to wait and see. But I would not. I would take it with a grain of salt, and I would also, if you guys are heavily exposed to the long side, I would, me personally, I'm gonna, become defensive and move to cash and wait for this bigger drop. I'll do some short trades, of course, but any kind of core holdings that I have are going to be, sold, and or I'll write, huge covered calls on it. Whatever the way I'm going to do it, you have to be defensive because September is going to be a very volatile month, and we can expect some massive moves. So again, if we look, the expectations, final wave up. So now what we want to do, like I said, we want to count the five waves up. That's here. It looks like we're making one right now. If we go to a 15-minute, well, also, this is another thing. So three, four, five, and you can see we have these massive bearish divergences in place. So that typically happens at the wave fives where, if we break out, everybody's going to be jumping in on the long side, and next thing, they're going to be trapped on this. So wave fives, you do not want to be jumping on the trend, whether it is on the downside or the upside. That's where you get the counter moves that are going to be that usually retrace anywhere from 50 to 78% of the entire move. So that's it on this. We have the divergence. We're on a buy signal on the Arun as well as our trend indicator. But this is another thing that, is kind of, it's given me I'm feeling pretty comfortable with looking for this to be the wave five and the final wave up before we come down. Because if you notice, just look at our trending here. So this was the wave three. You can see this thing never went into a sell signal from that's 8/8/24, went straight up, and here's your first sell signal, and that wasn't until 8/22. So we had a massive rally from 8/8 from August 8th. The trend was in place. You can see we had no sell signals until here. But this is why, with this you put the wave three, because now we're seeing, the trend going bullish bearish, and it's jumping around. And again, that's typical of a wave five up. And once this completes, all these people that have been buying and holding up everything, they're going to be the ones selling. So the actual pattern, what is taking place right now is the bears have failed miserably to get through the important 55-60 level. I've been throwing this out for a long time. I said that has to be taken out. When it does, then then we're going to see some capitulation to the downside, and it could go very fast. So this is it. Until the bears can get it through this, everything, this wave five can extend for 2 or 3 weeks. I don't think it's going to, but it to me, if we pop up, come down, and go up again, it actually will be it would be a classic wave five of five, because we're going to be counting the five waves here. So this is it. Really, the what I am saying is that if you're if you're just become defensive, probably the best way I can put this. Buy some protective VIX calls far out, go into October. Anything, there's just, it's going to be a very volatile, so you want to be protected. So let's go to a 15-minute chart here. And again, you can just see this is that important. Hang on one second. Let me just, yeah, okay, here we go. So again, and I've had this up here forever, the 55.60. The bears kept failing to get through it, and then the bulls are doing it. But we just been in this really large range right now. So we're breaking out of it. But the only thing I'm going to show you, and again, I don't know if this is going to play out this way. I just like to point them out and then keep track of it. Where if you notice here, we had this big wave three up, down four, five, and then what happens? Remember, I think I was the one saying this could have been the final wave five because we had this big drop down, only to see us, gap back, go back up and make new highs. But you can see how it's, these moves were going back and forth. So here's your wave three right here. And we came down, down, and then up again. And you can see it almost has the same pattern on it where even the wick on this one, and then we came down and then this is the final leg up on it. And it's again, it's not supposed to mirror it. It's supposed to just give you an idea. It's not going to follow it exactly. It's going to mimic it. So this is obviously a different pattern, but you can see the fractal part of it where I was just showing you with the big wave three up, and then from there we started chopping around, and that resulted in a 10% decline. So this is, I wouldn't be surprised to see us even go further than 10%. Now, one of the reasons, come September with these Fed, wishful thinking that that Powell's going to go back to ZERP again, are going to get their wish, and they're finally going to get a rate cut in September. But the smart money is going to know if the Fed is cutting rates, we are quickly moving towards a recession. They're not going to just do it for the market and say they're behind. They're doing it because they see what's coming up. And it's September, October. It's not going to be a pretty place. So let's just finish this up. So again, the important thing, Bears need to get it through the 55.60. The Bulls, if they get it above these levels here, where they have it above, but we have the all-time highs at the 56.67. And again, if it gaps up, I'm not against building a short position. Just know that we could go up here, but if you give it some time and say, all right, once even if I have to layer in, every 30 or 40 points or whatever, you're going to have a decent position, and we are going to, from there, as long as you give yourself time from these levels at a bare minimum, where you're going to see 55.50 or 55.60, but more likely we'd be coming down somewhere into the 53. So up here, it could be risky. It's not going to be for anybody, but the safer way to do this actually would be wait for the breakout and then wait for us to come back down underneath the where the resistance was, and then you can get aggressively short when we have other support levels that are going to be breaking. So if I go this, so the first support level, well, we have one right here. So the first thing you could say 56.32 is the first line in the sand that the Bears need to get through. If they do, then what happens is we are going to see a quick move down probably into this area here, that 55.81, and then more likely down to this 55.60 level. So this is it up here. Again, on the upside, it's hard to say where it will go. We can do this on it and just give it an idea, but let me just see. Let me move this down. So if we're just going to try to get a guesstimate as far as where everything where it could be going, so we're going to use some extensions here, and here you can see 100%. This is where that line is. So 56.72, I believe. Hang on one second. Let me get this out of the way here. Yeah, 56.72, but that's pretty close to the previous highs, but that's just 100%. So if they're going to go up, then we're looking at 56.93, which this is kind of where I believe we'd be going. Anywhere from the 23 up to the 50% right here, and these levels here are 23 and 36. So right in this support, this resistance level right here, actually it's just made up from the size of these moves here. So we can keep an eye on the 5693, maybe even up to the 57. But these are some targets we just want to keep an eye on. So let's see what plays out tomorrow. Have a great rest of your weekend, and I'll talk to you guys in the